I think in the next 2 years, Bitcoin's going to get litigated on. And the number one thing that will make Bitcoin legitimate and successful is successful businesses in this space. I think that the most important thing that we could do is create a framework that just helps and facilitates as many projects and businesses to be built in the space. Because ultimately, when it comes down to is, if we can say you're going to kill 30,000 jobs, then they're not going to make it illegal. You need to have a group of 150 people who all know everyone in that group and have some level of trust with those individuals. And then you can build amazing things very rapidly out of that.
How did the Financial Times piece come about?
What ended up happening was, if you build a road, they will come. Eventually, someone was just like, hey, I need to understand who to interview for Bitcoin. Can I come to a meeting? And I was like, absolutely. And then that was that. And then the rest is history. And then he just loved the group so much. And I ended up chatting with him on like an hour and a half about philosophy. And then he just said, well, I'm going to go to a Satoshi Square meeting, and then I'm going to get my photographer to come and do a shoot on you guys in 2 weeks. And we were like, awesome. I actually had, this week alone, including you guys, I've had 5 interview requests for the group. I actually try to serve as a facilitator of the community. The thing that I tell reporters, and I'm getting a lot of referrals now, is that I'm probably not the guy you want to interview, but through developing this group, I know for a fact the perfect person for you to interview. Stuff like that is what we're doing. As it relates to community outreach, it's growing pretty massively, which is why I have high hopes for the press release day. Actually, just to let you know, Mark and Bailey are actually they're regular meetup attendants.
That's great.
Yeah.
Fantastic.
It was actually funny because Mark came and he was asking us how to do cold storage, and he came out to like 2 or 3 meetings, and I was giving him advice on Bitcoin. And then he was like, hey, come out to this conference where you're going to pay $300 to hear my Bitcoin analysis.
Yeah.
You son of
That was a sample from Jonathan Mohan, founder of BitcoinNYC.org. We had a great talk about Bitcoin and community, and there's lots more later in this episode. But first, listener call, price manipulation by the powers that be, Stephanie's conference interview with David Pullis, senior manager of Bitcoin Fund, Bitcoin wallets and human error, hypocrisy in an evolving conversation, Stephanie's conference interview with Adam King of CoinFlash, and finally, finding value in community with Jonathan Mohan. If you're brand new to Bitcoin, check out letstalkbitcoin.com/learn to be directed to the Bitcoin Education Project. If you like what we're doing, please review us on iTunes or your preferred podcast platform. This helps others find the show, but generally we just really appreciate it. Hi, and welcome to Let's Talk Bitcoin, a twice-weekly show focused on the ideas, projects, and people building the new digital economy and the future of money. If you're brand new to Bitcoin and would like to learn more, please visit letstalkbitcoin.com/learn to be directed to the Bitcoin Education Project. My name is Adam B. Levine. I'm a writer and speaker who likes to talk about complicated topics in understandable terms. Joining me in our twice-weekly search for clarity, Andreas M. Antonopoulos is an expert in distributed systems and decentralized networks.
Hello.
Dr. Stephanie Murphy is a scientist and syndicated radio host.
Hello.
So at Let's Talk Bitcoin, we've added a listener call-in line if you'd like to either reach us directly, because you can reach us through the system, but more importantly, if you'd like to leave a listener mail. This is the first one that we've received, and thought it was a great question and a good way to kind of roll out this. If you'd like to leave one in the future for us, that number is 1-855-WE-TALK-BITCOIN. Again, 1-855-WE-TALK-BITCOIN.
Hi, guys. My name is Dave. I live in Phoenix. I listen to your show regularly and love it. I think you guys are doing a great job, and thank you for what you do. I have one thing I was hoping you guys could cover. I've looked into Bitcoin quite a bit and trying to look for its weaknesses, and I feel that Bitcoin's biggest weakness is its susceptibility to price manipulation by the powers that be or whoever wants to control it. Not so much for profit, but manipulating it to make it look foolish so that people won't invest in it and so on. Anyways, thought it would be a great topic. It's something I don't hear being covered at all by anybody, and it really concerns me that governments and banks can manipulate the price if they're not already, making it look foolish. Anyways, thank you. Bye.
Well, that's a great question, and I've heard that come up a lot in my circles, too. The thought that first comes to mind for me when I hear that question is, oh yeah, gold and silver are never manipulated. The stock market is never manipulated by the powers that be. With Bitcoin, sure, it can be manipulated. There's no doubt about it, as with any commodity. But the thing about Bitcoin is that even though it's pseudonymous, we can see the transactions happening. So we can see when there's a big sell-off, and we know where Bitcoins are on the internet. We don't know how much gold exists in the earth, or how much is lost or buried or in people's homes, or how much is being bought and sold on a daily basis. We really can't see that information. So I feel even more insecure about the price of something like gold or silver because there's no real way to verify it. Whereas with Bitcoin, there kind of is.
Really, this is very much about price volatility. I think we have to recognize the fact that Bitcoin is a penny stock. I mean, in terms of its total volume and size, it's a penny stock. Let's not kid ourselves. It's $1.7 billion. You know, there are minor defense contractors who do cantinas who are worth more than that. You know, this is not some massive store of value, at least not yet. But at the same time, we've seen a bit of volatility. If you wanted to manipulate the price of Bitcoin, it would be rather expensive, for one thing. Generally speaking, when you try to manipulate the market, you'd better be very committed and very rich. Otherwise, it's going to turn against you and you're going to make other people rich in the process. Manipulation doesn't always work. And in fact, on the Bitcoin markets, what we've seen over time is that the manipulation is less and less effective. When people do massive sell-offs or try to induce a panic, people aren't panicking anymore because they've seen it bounce back. So they're like, I'll just wait. It'll bounce back. It's fine. And
the few entities that I could see being more successful with manipulation are the exchanges, especially the big exchanges. So like, for instance, if Mt. Gox wanted to manipulate the price of Bitcoins, they might be in a position to do more so than an individual who holds a large amount of Bitcoins or something like that. But the more decentralized exchanges become, and that we're already seeing that happening, the more insurance it is against any one person holding too much power over Bitcoin.
Yeah, absolutely. I like to think of Bitcoin economy. If you say the US economy is like a big cruise ship, it's got a lot of momentum and weight behind it, a lot of inertia. And next to it, there's the little zodiac of Bitcoin. And, you know, it's been a fun ride. We're bouncing around on the waves. Every little ripple in the water sends us shooting off in a different direction. You know, it's a volatile currency. But then again, volatile from whose perspective? I think this is a first world currency problem. First world currency problem, if you like.
But in those problems of volatility, there are also opportunities to profit too. Two sides of the same coin, if you will. Ha ha ha.
Absolutely. I've always seen it as a buying opportunity. So if you don't panic, in fact, the opposite reaction is, ooh, good. I was hoping the price would drop a bit so I could buy some more.
Yeah, exactly. You know who we have seen doing manipulation, not necessarily with Bitcoin, but with some of the other cryptocurrencies, especially the ones that are newer and much smaller. There have been just so many instances of pump and dump where, you know, there's somebody rolls out a new altcoin, they get a bunch of people mining it, or maybe they pre-mine it before they release it to the public. Then they somehow convince somebody, maybe bribe somebody to get it traded on some exchange, wait for the price to go up, and then they dump all their coins, and then the coin is essentially dead. And we've seen that happen a bunch of times. So, I mean, if that's not manipulation, I don't know. It may not be a very efficient form of manipulation. It is certainly possible. But again, I think that the nature of having transparent transactions, having this public ledger that is the blockchain, does make it at least so that we can get a little bit better basis for our information about the price.
I think, David, the listener was correct in that if someone wanted to attack Bitcoin, one of the main areas to attack Bitcoin would be manipulating the exchange rate against other currencies. And so that's always a risk until Bitcoin's volume increases. But at the same time, I think it's only a temporary risk and it's only a sentiment risk. So they couldn't do it sustained for a very long period of time because that just enriches the people who go against that trend. And if they didn't do it on a sustained basis, then they'd have to hope that the sentiment they created was strong enough to permanently tank the price. Again, it goes back to the buying opportunity. If Bitcoin dropped to $1 today, through no fault of the protocol, through no fault of the currency, through no change in the fundamentals, just because of market manipulation, I would basically go looking for as many dollars as I can to buy as many $1 Bitcoins as I can. And I think a lot of others are going to do that because they realize the fundamentals haven't changed. This is a temporary price drop. And wow, what an opportunity that would be.
Well, David was actually kind of specific about what he was concerned about from the manipulation. He was talking about how it could make the currency look foolish or unstable. And I think that there's something to be said there, because Andreas, on the one hand, you're saying that you view it as a buying opportunity, and I think that you're right. Sophisticated buyers or sophisticated players in the space can recognize that this is not something based on fundamentals, take advantage of that situation. But the concern is that new people who are in because they see the price going up. If they see the price going down substantially, then they probably panic out. And it doesn't really matter that the price goes back up because they've already taken a substantial loss that then sours them to a certain extent against the currency moving forward. I think at this point, it's worth talking about how manipulation actually occurs in standard markets and why Bitcoin is so different. I don't know if you guys are familiar with how paper markets work relative to physical markets. Stephanie, you mentioned that the gold and silver markets are manipulated, and I think you're right. So tangible physical goods that take up space in the real world always have a cost associated with them. It doesn't matter if it's chickens, it doesn't matter if it's silver, whatever. Ultimately, if you were to take delivery of it, then there is a cost associated with the transport, the storage, the protection, the eventual, you have to find someone to eventually sell it to. The problem with gold is that gold is heavy, it's expensive, and it's not divisible. So if you are trading gold and you don't care about accepting gold, instead you're just looking to profit off of price movements from gold, then it's in your best interest to open a contract to buy it in the future. And if the market goes your way, then essentially you settle for US dollars. You're taking advantage of the price without having any of the costs of ownership. With Bitcoin, that doesn't make any sense because there is no cost to accepting Bitcoin. It's all borne on the part of the sender, not the recipient, and the costs that there are incredibly small, even less than if you were going to convert it into US dollars, where there'd be a transaction fee. You'd have to convert it at an exchange, which has a couple of percentage points associated with it. Right there, there's not a reason for anyone to engage in a forward-looking futures contract unless they actually want to take delivery of the Bitcoins. The best way to invest in Bitcoin and try to profit off of the price movements is to actually own Bitcoins. The costs are very low. You have to secure it yourself, but that's actually relatively easy to do using things like paper wallets. And at the end of the day, you have the Bitcoin. You own Bitcoins, and so there's no counterparty risk. Whereas if you engage in a forward futures contract, then you have the risk of the currency going down. That's one risk that goes against you. But then the other risk is that you get to the end of the contract and it does go your way, and the person who is supposed to fulfill the other side of the contract doesn't actually have the Bitcoins to deliver. If the price is, doubled in the amount of time that you bought this forwards contract, then maybe they don't actually even have the ability to buy them at market rate. By engaging in these forward-looking futures contracts, you're bringing in counterparty risk, which is the risk of the other guy in the trade failing to deliver, where if you just invested in Bitcoin straight up, then there is no counterparty risk, and all you have to worry about is the price going down. The other side of this is that if you want to manipulate something in an environment like this, you actually have to own a lot of it already. With something like gold or silver, you can sell a forward-looking futures contract while you don't actually have any gold. Because again, the idea is that at the end of the day, the vast majority of people are not going to want delivery of the physical good. Instead, all they want is the potential profit in US dollars that they would gain from it. With Bitcoin, that doesn't work, and it puts you into a situation where you can expose yourself to pretty massive losses. So this means that if you want to manipulate it, you have to actually buy it first at market rate or risk having trade blow up in your face and be even worse than if you actually had them. Compare that to really anything else out there, and there's just no question. So my concern for a long time has been that a central bank or a government or some sort of bad actor who's not looking to profit will come into the market and start buying up Bitcoins at a slow but consistent rate. Essentially add volume to the market, which will then increase demand without increasing supply, which will mean that the price will go up faster than it otherwise would. The way that I would play this if I wanted to scare people out of the currency is to keep doing this until I've accumulated maybe 5% of what's in the market, 10% of what's in the market. And then at a certain point, where I think it's advantageous for me to do it, I would dump all of the Bitcoins onto the market at whatever, the price is, and essentially flood the market with supply and crash the price down to almost nothing. If you did this with a large enough amount of Bitcoins, if you did this with a large enough proportion, you would basically blow all the way through all of the buy walls that are up. And, it wouldn't work for forever, but you could probably, force the price down quite low for, a couple of days, maybe even a week. And certainly you could cause a lot of chaos in the space. But again, it's one of those situations where you have to not care about the losses that you take, because you would take enormous losses from doing this.
So the candidates for doing something like this are basically the Winklevoss twins or or the U.S. government?
Well, the candidates for this are anyone who has the ability to print money. It doesn't really matter who you are. I don't think the Winklevoss twins could pull it off either. I think that the Winklevoss twins...
Yeah, don't they only have 1% of all the Bitcoins or something like
right,
that?
Exactly, something like that. So no, I mean, I think that from a manipulation standpoint, that's the only way that I can really see a bad actor, that he's talking about, like a government or something coming in and trying to have a negative impact. Because they got to buy him first in order to do it. And to this point, I don't think that that's happened in a major way, at least not so much that anybody's talking about it. Does that make sense?
Yeah, it does make sense. And governments at the same time, as long as they keep waging wars like the U.S. government does, as long as they keep printing money, there's a greater incentive to use Bitcoin. And so they're adding to the value of Bitcoin all the time. So right. The more they do what they do, the harder it's going to be for them to crash it.
I'd also like to juxtapose some of the other markets, because let's not pretend that Bitcoin is this market that is easy to manipulate or rigged, whereas all the other markets are pure and efficient. We're finding out increasingly that some of the bedrocks of the financial institutions are completely and thoroughly corrupt. So LIBOR, the London Interbank overnight rate that sets the interest rates for every financial instrument on the planet, I've written LIBOR into contracts. That was grossly manipulated. No one went to jail. We recently found out that in the Forex markets, during the 60 seconds before and after the rates are published, a group of brokers acting together in collusion were front-running trades before the market opened and were manipulating Forex prices. This just broke last week. And we know that with high-frequency trading, one of the main things that's happening is front-running basically advantageous trades in order to manipulate the market for the benefit of the brokers. This is happening consistently on every market. And if you look at currencies, on the other hand, manipulation is actually called by a different name. It's called monetary policy. Most governments do this on a massive basis. The US really can do it only in a very subtle way. But most of the rest of the world, if you exclude the top 10 currencies, they manipulate the monetary supply very, very blatantly and very obviously. Again, I think this is a first world currency problem. In the vast majority of the world, this is not only the norm, but it's done so blatantly and so consistently that people have very little trust in the future value of their existing money. The level of volatility we've seen in Bitcoin isn't really that big. If you ask an Argentinian, or if you ask someone from Zimbabwe, they'll laugh at your concept of volatility.
Another thing worth mentioning is the entities who have the easiest time manipulating are, in the case of conventional markets, it's the market maker. It's the people, because again, you're looking at a debt-based system for most of the time with most of these things, be it commodities, be it currencies. It's all about debt there, what you are owed. And then because you are owed something that has a tangible value, you can cash it out at that tangible value, which means you don't actually have to get your hands dirty with the underlying commodity or currency. Now, contrast that to Bitcoin. In Bitcoin, because there aren't really any market makers outside of the exchanges, and Stephanie, you're right with your earlier point. I think that exchanges certainly, especially through the liberal application of latency, right? So if an exchange causes lag, then they can cause price movements that are reactions to that lag. So I think there's a concern there. But really, I think the most power in this relationship lies with the miners, right? Because the miners ultimately are in charge of transaction processing, of fraud detection, and also of currency issuance. But because of the way that the system is built in Bitcoin, it's very difficult for a single miner or a single group of miners to collude in order to be able to perform this sort of manipulation that you might otherwise see. And again, that's different from current markets because most markets are kind of monopolized. They might have a few market makers, but it's a handful, as opposed to Bitcoin, where there's an enormous variety of people working on different hardware in different countries with different goals. By spreading out the power more, you wind up with a system that's much harder to game.
So I'm talking with David from the Bitcoin Fund. Hi.
Hi, it's David.
You're from Malta.
Yeah.
So did you come all the way from there for this conference?
Yeah, from Malta to London, London to Los Angeles, Los Angeles to here, now back through New York to London, London to Lisbon, another event, and from Lisbon to Frankfurt and Frankfurt to Malta.
Oh my goodness, I can't believe you remembered all that. That's a long schedule. So if you're not too jet lagged, tell me what Bitcoin Fund is.
Sure. Basically, this is Bitcoin for institutions. If you are an institution, for example, like a hedge fund, you cannot book Bitcoins on your book, because what are Bitcoins? They're not commodities, they're not equities. So what we're doing is we made a fund so institutions can actually, for example, like a hedge fund, book units in a fund on their books. So this opens the world of Bitcoin to institutions. So instead of the normal way where you open something to the small guys, we're opening it to the big guys so they can invest with us. It's not just institutions themselves, but institutional investors, which means any person qualified to engage in institutional trading can invest in Bitcoin. The advantages, instead of having your own wallet and investing in Bitcoin yourself and making sure that your wallet is not deleted or tampered with, you can give your money to the fund, which is a very simple structure. 1 unit in the fund is 1 Bitcoin. So basically, if you want $10,000 worth of units in the fund, we go and buy 10,000 units worth of Bitcoin. So effectively what it is an institutional wallet that gives the safekeeping of the wallet in check. Also, the fact that it is fun, you can also write it down in your inheritance, because you cannot pass Bitcoins through your lawyer as an inheritance, but you can pass a fund over to your kids or whoever you want to give the money to. So it's a structured way of Bitcoin. So we're kind of like putting white in the gray areas of Bitcoin, if you might say, put it this way.
Do you guarantee the Bitcoins that are in your fund against like theft or loss? I bet people would be concerned about hacks and things like that. How do you protect them against that?
One of the advantages of the Bitcoin fund is safety. We have one wallet, one single wallet. It's actually the second biggest wallet in the world. Wallet can check it online. Yeah. To safeguard this wallet, which of course it's worth like roughly about 30 million right now. So with 92,700 Bitcoins to be exact. We have bank vaults in Switzerland and around the world that we keep in hard drives the actual wallet. So it's pretty impenetrable from a physical point of view to get access to the drives themselves. So that's an extra layer that we're providing in the world of safekeeping. And other advantages, let's say if you're an institution, which this is only dealing with institutions, and you have an order to fill for $500,000, even $1 million worth of Bitcoins, it's very hard for you to get filled on Mt. Gox. And if you get filled, the market will move against you. Yeah. However, with us, since we have the second largest holders of Bitcoins, we can market match internally, because we always have people who want to sell. So we'll market match, and you not even have to go to Mt. Gox. Sometimes there might be huge orders which we have to go to Mt. Gox, where we can skim your order in a way that the market doesn't move against you, because we are prime brokers. Of course, this is what we do. So we give best fills to our customers when they want to get filled on pretty good sized orders. And of course, no one else can do it better, because anyone who wants to buy Bitcoins would have to go through the exchange themselves. Whilst with us, we can satisfy most of the demand through our own pool.
It sounds like you're storing the Bitcoins in cold storage. It's pretty safe. But what if somebody wants to withdraw Bitcoins from the fund? What is the process for that?
If someone wants to withdraw Bitcoins, so basically redeem their units in the fund, you can have two things. You can withdraw anytime you want, and you can withdraw either money, as in like dollars, euros, Russian rubles, or Bitcoins. Since we're actually buying Bitcoins, you can say, hey, I have $1 million worth of Bitcoins with you. Can I put them in my wallet from your wallet? Yeah, you can do it instantaneously, and it's a seamless transaction. So it's actually not just a fund and a financial instrument. It's actually holding Bitcoins, which you can transfer in your own wallet.
Okay, and do you accept U.S. customers, or is it only in the Eurozone?
Before now, we accepted everyone in the world except U.S. people because of the SEC.
Right.
In fact, we had to pull the plug on all the American clients. However, we set up a feeder fund, which is set up in Delaware, compliant with all the SEC, the Inland Revenue, and in the US. So now, actually, since last week, the market is open for the Americans. We had a lot of inquiries by the US for the past 3 months, by email, phone, and every time I had to put the phone down and say thank you, but we cannot accept you. but from now, through the feeder fund, which is exactly what the master fund does, we can actually accept US customers.
Where can people find out more? What's your website? How can they contact you?
If people want information about us, they can go on the feeder fund website, since we're talking about mostly US clients, which is www.bitcoinfund.us. And there is much of the information that people would need to navigate through to know everything about us.
David, thank you so much for talking with me today. I appreciate your time.
It's my pleasure.
Let's Talk Bitcoin is heard each week by thousands of people who are participating in the new digital economy. Our listener base of Bitcoin owners, miners, investors, technologists, and merchants is growing fast. We offer a limited number of short advertising slots in each show to keep our listeners engaged and to provide maximum impact for our sponsors. If you'd like to talk to us about Let's Talk Bitcoin, send us an email at sponsors@letstalkbitcoin.com. If I showed you a website where you could easily purchase electronics from the world's largest distributor with Bitcoins at 0% markup, would you think it was too good to be true? Good news. It's real, and it's at bitcoinstore.com. Choose from 500,000 items, save money over Amazon and Newegg, and convert your Bitcoins to real-world items. You can even buy with privacy. All they need is a shipping address. But don't take my word for it. See for yourself at bitcoinstore.com. So I received a listener comment that I felt a lot of empathy for this guy. I felt sad for him. He lost the password to his Bitcoin wallet. Haven't we all been there before where we've lost some Bitcoins? And so here's what he had to say. And one of the reasons I felt so bad was because he's a newbie. This was his first Bitcoin purchase and he lost it. So, that's a real bummer. After much deliberation, I bought Bitcoin about a month ago. Today, I lost my wallet info. Bye-bye, Bitcoin. The good news is it was only about $25 worth. Do you think there will be a different cryptocurrency in the near future that is easier to get and not so easy to lose? Thanks, Stephanie. Oh, have you guys ever lost Bitcoin? Oh yeah, I've lost. I've lost Bitcoin, and I've felt like I've lost a whole lot because actually the last time I moved, my computer went down, and I had paper backups done through Armory Wallet that essentially let you type in like a 16-digit code, and it recovers your private key. And so I didn't know if I had Bitcoins in the paper wallet backup ones because I made the backups so early, or if I had them in other places. It turns out, after 4 days of downloading the blockchain, because I had a really bad connection where I was, discovered that, in fact, I was able to recover the vast majority of my Bitcoins, but it was a very, very tense couple of days, and my wife can attest I was quite unhappy for a long time about it.
There's an important lesson here, which is that for the vast majority of people, Bitcoin loss occurs not because of theft, but because of password loss or corruption of files or loss of data. And this is something we've seen consistently, and you can see it on the forums because this is an ongoing discussion, right? On the one hand, you get messages which say, oh, I went on Mt. Gox, I logged in, and then after logging out, I got this message that all my funds had been withdrawn. Oops. And those are attacks from Trojans and keyloggers that inject API keys and take away your money. By the way, the best approach to that is use two-factor authentication and keep a big chunk of your money offline on paper wallets. But at the same time, you see people going into these rather elaborate schemes. So they'll say, I've got Bitcoin QT on a TrueCrypt volume that I put on a USB key, which is password protected with 17 layers of encryption. Well, yeah, you're going to forget the password. You're going to forget the encryption key. I've lost data that way. Many years ago during a move, I was moving from London to New York, and part of the move was moving 2 massive hard drives. At the time, it was a lot of data. It was about 1 gig. Photographs, private notes, documents, etc. And I had to get them through 2 layers of customs and immigration, so I encrypted them as any good security person would. And then I got back, and for the life of me, I couldn't figure out what went wrong, but the key wasn't working. And so I lost a gig of data.
Oh, and then when you got to the border, they were shaking you down and they said, "Come on, terrorist, give us your passwords." And you said, "Really? I don't remember."
No. This was in the good old days where I could say, "Hey, this is a free country." Now they just laugh at you if you say that. So yeah, it was basically a big problem. Here's another story that's really illustrative of this. If you know the story of WeUseCoins.com, this was an organization that was built and has this really nice introductory video for people to understand Bitcoin. That organization had a lot of donations for production of that Bitcoin. They had that Bitcoin video. They had 7,000 Bitcoin in donations. And in order to protect that, they used encryption and backups and backups and encryption and backups and encryption. And they lost all of it. 7,000.
Oh, no.
7,000 Bitcoin because of a crypto key problem or backup problem or both. This is a very important lesson. You have to very carefully balance the possibility of theft to the possibility of losing things because of the security measures you take. And it's a difficult balance because the kind of passphrase that cannot be broken is the kind of passphrase that can be forgotten. Now, I'm biased on this. I sell paper wallets, so obviously I think paper wallets are a better solution. It wasn't that I think paper wallets are a better solution because I sell them. It's the exact opposite.
I don't really view the paper wallet thing as a conflict of interest for you here, Andreas, because they're open source. So it's not like people have to buy them from you. You make them available. You think they're a good idea and you offer to sell them to people who want to buy them. But if somebody just wants to go completely on their own and use all of your information and data, then they can do that too.
Sure, exactly. At the end of the day, this was absolutely a scratch my own itch. You know, as a security professional and expert, I decided I needed to find a way to securely store my Bitcoin in a way I wouldn't lose the keys easily, and at the same time, they wouldn't be susceptible to theft. The sweet spot in that balance ended up being the approach I took with my paper wallet design, and then I decided, maybe somebody else might want to use this. I very much believe that it's difficult to strike that balance. It's not really a matter of any technique or tool. It's more about a complete process that keeps you secure across the entire life cycle of the Bitcoin, from the moment you buy it, store it, put it offline, until you recover it and use it and spend it. And that process is not easy to do. So figuring that out is one of the big challenges we have in Bitcoin. It's a user experience, user interface design problem.
I had an experience too where I lost Bitcoins way back in, 2011 when I first downloaded the Satoshi client, and it didn't take 2 weeks to sync the blockchain. I had a wallet that had about maybe 10 or 12 Bitcoins in it. I encrypted it because I was scared that my Bitcoins that were worth like $2 each were going to get stolen. And then they went up to $5 and I thought, ooh, I better protect them. So I made up a passphrase, didn't write it down. Then I proceeded to forget the passphrase and I said, oh, well, I'll be able to remember it at some point. Then Bitcoin started going up a lot more and I said, maybe I can try to remember this passphrase. No luck. So I still have this wallet. I haven't given up on cracking it yet. I know the answer is in there somewhere and I'm not giving up hope. Maybe I typed it in wrong the first time because I thought I knew what it was, but human memory is not exactly quite as good as storing data in digital form. So it's just something to be aware of. As you said, Andreas, it's really important to balance sort of ease of accessibility of your Bitcoins with security and how much you want to have, and realize that there are pitfalls with extra security.
I went through that process on trying to decrypt that gigabyte of disk that I had encrypted when I moved, and I went to extremes. I rewrote the decryption algorithm. I then built a dictionary of all of the potential words that I thought I had used in the original passphrase. Then I basically adjusted them for typos. I spent 2 months trying to brute force, with a relatively known passphrase, at least closely known passphrase. I tried to brute force the thing and just ran computing for 2 months trying to find all possible typos that I might have anyway.
And it didn't work. Oh, I'm so sorry. Those stories are just heartbraking.
Just went through the process. We all have to go through the process in that case, and the process
was denial, anger, acceptance.
Yeah, exactly. I'm now at acceptance, and Stephanie, it sounds like you're still in denial.
The second part of the listener's question was, do we think that there are any cryptocurrencies coming out that could fix this problem and make it recoverable? I think that the answer is no, and you guys can give a different answer if you think that there's a different answer. But I think that what's going to happen is that it's going to get easier to have security that isn't so vulnerable to human error. And I mean, really, that's what we're talking about here. In the case of I mean, I think all of us, this is about ultimately human error or error in, the actual way that things are being encrypted that is causing these problems, mostly human error.
I was going to suggest to this person that maybe if he feels more comfortable with it, he could try getting physical Bitcoin from Cassatius Coins. Those are the little physical tokens that are very stylized and pretty, but they basically have a private key on the back of them, right? So he doesn't have to remember any password. His Bitcoins are like on an object, if that's something he's more comfortable with. But he could also try blockchain.io. They do have a feature where they can kind of do like a password recovery thing. So it's a little more user friendly than perhaps something like just the Bitcoin QT client. I mean, we're already getting there with some solutions, but of course you could criticize both of those and say, well, they're not secure. Like if someone steals your physical Bitcoin, they have it. Or if somebody had peeked at the private key or something like that, or the redemption code or whatever for Mt. Gox, then they have it. Someone could sell you, something that doesn't work, or blockchain.info could get hacked. And yeah, those are all very real possibilities. So I think those are just things to be informed about. I can't tell you what to do or what's the best solution, but, we're trying to figure it out as we go along for ourselves.
I talked about this with Alan Reiner when we were at the Bitcoin 2013 conference. And one of the things that he's working on integrating into Armory Wallet is this idea of fragmented backups, right? So instead of having one paper backup where if somebody finds it, if someone breaks into your house and steals your paper backup, they can recover your Bitcoins. Instead, what this is the idea that you can take and say have 5 paper backups, and any 3 of them can regenerate the key. Take those and you don't all keep them in the same safe and you spread them out to a couple of different places that you think are safe, then it doesn't really matter if anybody steals one or even multiples of it. And you can, he was talking about scaling this up to 7 and going like 4 out of 7 or something like that. So there are other things like this that are coming out that will give more room for human error. I think that that's kind of the direction this has to go in because, like you said, Stephanie, when you're talking about being able to recover a password, I mean, that's great from a usability standpoint, but when I hear about people getting robbed, most of the time it's from online wallets. And most of the time, they have no idea what happened. They have no clue how it happened. It just happened. They found that their account is, empty. Again, in an earlier episode, we talked about how David Perry had his wallet broken into, and he was using 2-factor authentication on the blockchain wallet.
Yeah, that was a hard story to believe. And of course, we're all familiar with InstaWallet. That was hey, just go to this URL and you got a wallet and bookmark it and don't tell anybody the URL. Well,
right. Works until it doesn't.
Yeah, exactly. And it didn't. And I had an InstaWallet that had like maybe about 0.1 Bitcoin in it. I did file a claim with them, so we'll see if I can ever get that back, but I'm not holding my breath.
So the bottom line is crypto is easy. Key management is hard.
We received a piece of listener mail that was kind of holding our feet to the fire about something, guys. Do you want to hear about it?
Absolutely.
Oh, yeah.
The person said, it's a shame that you've decided to accept Litecoin donations, even though you have previously questioned its validity. For that reason alone, I won't be donating to the show and will encourage others not to do so as well. Did we decide to accept Litecoin donations even though we've previously question their validity? Are we one hive mind, or do we actually have different opinions from each other on this show?
Well, I think that I was one of the more skeptical people about Litecoin to begin with. Again, the question is, what are the advantages relative to what's on top right now, which would be Bitcoin? And to me, Litecoin has shown that it has enough of a user base, it's worth paying attention to. We've actually received some of our largest donations since we started accepting Litecoin in Litecoin. On the one hand, it's about finding ways to let people appreciate the show. On the other hand, when I started talking about accepting Litecoin with Andreas, you had a different opinion about accepting altcoins, because what I actually want to do is I wanted to accept all altcoins and just say, well, whatever, if you want to donate something to us, then donate.
I'm having some issues with the practical implications of trying to account and report on income based on a variety of altcoins. Because let's be honest, it's a real pain to try to account or report on them. So if the choice was between either use just Bitcoins or use all altcoins, then the answer is pretty simple. We cannot deal with the operational complexity of using all of them. Now, does that make us rank hypocrites if we choose to use one of them because people actually send us money? I don't know. Does that make us rank hypocrites? Adam, my opinion is completely dependent on what you tell me my opinion is. Why don't you tell me?
We're human is really what it comes down to, and this is a complicated topic that takes people a long time to wrap their heads around, and certainly it's something where just about every time we come to do the show, I have a slightly different understanding of it than I did the week before, based on the conversations that I've had, the people I've talked to, and the things that I've been able to read and learn. Really, it's a moving target. I understand Litecoin better now because I recognize that it has the network effect in the same way that Bitcoin has the network effect. So it's not really about the fundamentals. But even beyond that, Litecoin has one advantage in that if Bitcoin fails because of RSA encryption being cracked, then Litecoin is kind of the natural onboarding mechanic onto something else because it doesn't have that same vulnerability. It's a script-based algorithm. We're really figuring this out as we go.
I think it's important to note we don't really know what our position is because we don't have a joint position on this. We each have our own opinions. But most importantly, this show is so not about ideological purity of any kind. It's about exploration. And exploration means exploration both in terms of changing our opinion as we go through the discussions, but also about trying things. And if we're wrong, what we do contradicts what we say, well, yeah, sure, we're going to contradict ourselves, and not just once.
I would like to say for the record that I've been a total Litecoin fangirl from the beginning, but I've certainly been wrong on the show, and, I learn things as I go too, and since when is it not okay for somebody to change their mind? So I think it's totally fine, and, I really like Litecoin. I've tried to use it whenever I can. I think there's room for both Litecoin and Bitcoin and other cryptocurrencies, and I'm open to them. I just think it's great that we actually have listeners who want to donate to us in Litecoin, and now they can.
I think that the topic about infallibility is a really important one here. If you
We're
are
like
listening,
the Pope. We are infallible here on Bitcoin.
Yeah, right, exactly. No, I mean, if you're listening to this show with the idea that we're right about every single thing we're talking about, then you have misunderstood the purpose of the show. We sometimes get comments from people saying that they really like the show, but that it feels a little bit scripted because we all have such different positions. And we were actually just laughing about this before the show because this show is anything but scripted. We're doing more prep for it than we ever have, which means we have topics that are like on a list that we're going to talk about. But no, the reason why the show flows the way it does, and all of our divergent opinions, is because we all just have legitimately different perspectives, which is the whole point of the show. The idea is that when you're talking about new issues, things that are still very much in flux and where the philosophy of it is really being determined, it's better to have more positions in it so that the individual listener can make up their mind about who they think is most right based on the logic that they're using, based on, the way that they come to that decision, and based on, frankly, who ideologically they most agree with. We have a really good range on the show as far as Stephanie and Andreas and myself of our various opinions. We all believe in Bitcoin because of the things that we feel like it'll enable, but we all come at it from different perspectives, and I think that's really important.
Well, I have no idea what Adam's going to say next or what Stephanie's going to say next, but more importantly, I have no clue what I'm going to say next.
Right. Right. I mean, that's totally true, is that, this show is edited, but all of the discussion is completely organic and off the cuff. We have very basic topics, and then that is it. It's just we talk about it until we're done talking about it, and because of that, actually, these segments wind up running a really long time. Longer than they would if we were just succinctly writing down, okay, this is my position, this is Stephanie's position, you read your position, there we go, done. But it's not that simple.
I guess there is something to be said for a market mechanism of letting people know what you think about their opinions, right? Like, we do have individual tip jars. So personally, I enjoy it when people send me a personal tip. You can do that on my bio page on the website. It's not always too obvious on the front page of what the episode is, but it is something that you can do if you feel strongly about something we say, or send us an email and tell us why you didn't tip us or something like that.
And of course, the other thing to keep in mind here is that even though we have somewhere in the range of 3,000 to 5,000 listeners to each episode through the various means that it goes out, at the same time, we receive tips on a per episode basis from usually less than 20 people. And a lot of times it's less than 10. So the percentage that actually are tipping is very, very, very low. So, you asked earlier if he would have tipped to begin with. I don't know. Maybe he would have, but I think statistically speaking, chances are not very good.
People don't have to tip to add value to us, I guess, or to give back the value. Like, I think it helps us when you share the show, when you appreciate the show, when you subscribe to our feed, when you just even listen and hear our advertisers. I mean, all of that stuff, our show is hopefully giving value to you, but all of that stuff, even though it's free, gives value back to us too. So you're not required to tip. It's totally voluntary.
We've got the tipping record of a shitty diner on a Sunday morning. And at the end of the day, you know, you've got to really appreciate the fact that we cannot spit in your burger. So,
well, but again, it's not really about the tips. The tips are great, but if we wanted to get tips, then we would, you know, be saying at the end of each segment, hey, and if you really like this segment, go and tip us at, you know, letstalkbitcoin.com. The reality is that we're in this for the conversations. We're in this because it's a valuable thing for each of us individually, but also, you know, for the listeners out there, for us to be having these conversations and talking about issues in an in-depth way. And again, changing our opinions as we go through, and as new information comes up, then we modify our stances, and we don't, you know, disclaim and say, oh, well, we never said that thing to begin with. It's all on the record. If you want to go back and hear everything we've ever said on the show, you can totally do that. But just understand that this is a very evolving thing as we go.
Talking with Adam King from CoinFlash. What is CoinFlash?
Well, CoinFlash is our new startup. We've launched, we did about a soft launch about 2 weeks ago, and what we're doing is we're creating an agent network that allows consumers to go into local trusted retail locations and purchase Bitcoins for cash instantly on location.
That sounds really useful because so many people are like, where the hell do I get Bitcoins? I don't want to wire money to the sketchy Russian account, so what do I do?
Exactly. That's we're trying to solve that, but at the same time, we want to make it, basically we want to make it easy for people. That's the entire thing that we're trying to accomplish here. And we don't believe that waiting 7 days for a bank transfer to clear, or as you just said, wiring money to some sketchy company in whether it be Russia or Japan, or with the recent crackdown on Mt. Gox that now you can't transfer money through Dwolla to Mt. Gox anymore. We basically want to keep the availability there while fully complying with all of the new federal guidelines and regulations that have come out.
So how do you manage that? How do you run a business like this and comply with whatever you think you're complying with?
So we've spoken with a lot of different lawyers on the subject, and what we've actually been able to do is centralize all of the regulatory compliance on the corporate level, and then create an agent network where it's all passed through. So our agents don't need to individually comply. They're working for our company, CoinFlash, and so they don't have to worry about market volatility. They don't need to worry about federal compliance. There are some requirements. They do need to comply with our internal policies as well as our anti-money laundering policies, but they don't actually have to file any paperwork. They don't need to go through all of the same rigmarole that the CoinFlash company itself needs to go through.
So you're taking on basically all the risk that prevents people from getting into this business in the first place. That's really cool.
Exactly. Yeah. We are taking on all the risk ourselves, and we've done a lot to mitigate a lot of the risks for ourselves. And we are making sure that we do fully comply, and it's something that kind of makes us unique because a lot of the companies that are out there today, unfortunately, while we do think they're great ideas, things like the Bitcoin ATM, or even, as I'm standing next to talking about Lamisau, which is right next to us, I've spoken with all of them. They're really great guys. We're a little unclear on how, in the end, they're actually going to offer their services in the United States because of all of the federal regulations that have come out in the past few months on the issue.
Right. So the idea is to build this network, and then, what would happen? So somebody would go, walk me through a typical transaction. Someone would go to a local drugstore and they'd say, I want to buy some Bitcoins. They'd hand over some cash, and then they buy Bitcoins for a percentage over spot, and then you split the difference of the percentage over with the merchant. Is that how it goes?
Right. So it basically works like this. A customer will come into a store. First they'll go to our website and they will find a location in their local area that offers CoinFlash services. They'll walk in, they'll say, hey, I want to buy some Bitcoins. The agent that's representing CoinFlash will then scan a QR code with their, for their Bitcoin address, and then enter a couple of details about them, how many Bitcoins they want to buy, or if they prefer to say, I'd like to buy $100 worth of Bitcoin, we can go that way too. Give us their name and then either an email address or a phone number to send them a receipt. and all that information is stored securely on our servers. And the funds are then transferred instantly from CoinFlash itself directly to the customer in store on the spot.
Okay, so people get their Bitcoins pretty much instantly. They do it from a physical location. That sounds great.
And for cash.
And for cash. Okay, so tell us your website. Where can people, if they want to follow you on Twitter or keep up with you or whatever?
Yeah, on Twitter we're at CoinFlash, and our website is www.coinflash.com.
And people can request a location, right? I think I did that myself for my town that I live in.
I've probably seen your location request because I monitor it daily. So you can go to our website. You can either request a new location if we don't have a location in your area, or you can actually sign up to become an agent. And to your point before, we have a pretty progressive commission structure. So all of our agents do make a commission on their purchases.
Cool. All right, Adam, thank you so much.
Everyone knows that offline storage is the only safe way to store your Bitcoins. Now there's an easy, convenient, and secure way to make Bitcoin wallets for safe offline storage. With the SafePaper Wallet Kit, you get everything you need to print Bitcoin wallets using your own PC. Store them in a safe deposit box, your home safe, or even your sock drawer. Anything's more secure than keeping them online. Get your kit now at safepaperwallet.com.
You're listening to Let's Talk Bitcoin, the premier audiocast providing news and insights that cover the rapidly evolving world of digital money. Our twice-weekly shows include analysis of late-breaking news, updates on key technical, business, and regulatory issues, and in-depth interviews with the key people driving the new digital economy. Let's Talk Bitcoin offers sponsors an attractive way to reach a targeted and savvy audience. For more information, email sponsors@letstalkbitcoin.com.
Joining me today, we have Jonathan Mohan from the Bitcoin New York group. Now, you identify more as a networking group, right?
With Bitcoin NYC, we're striving to become New York City's professional networking group for all things Bitcoin related. When it comes to the finance types in New York, you kind of have to add a couple extra words to your meetup group for them to respect you. So that's kind of where I'm coming from on that.
Now, you guys have been doing this for a while, longer than most of the Bitcoin meetup groups out there. So what's kind of been the process? Did you start off with nobody attending and you've reached points where you're happy with the numbers, or did it start off with a lot of interest? What's been the journey, so to speak?
I would say, surprisingly enough, we weren't one of the first. We are the most consistent. About 3 months ago, I just made a Facebook group, and we got 30 members in a day. And I said, hey, on Thursday, every Thursday, let's meet up at this Starbucks. We had 8 people come out, and the one thing that has never changed, despite the location or the people, is that every Thursday at 6 p.m. we have a meeting. And I think that level of consistency allows a community to be formed around it.
We're starting a Napa Valley meetup group, and we're doing it once a month. We've got our second one coming up, and it's again looking like it's going to be a little bit shaky on attendance. So you think that it's about the weekly, it's about the being able to have consistency and start to build a community that makes it accessible?
Well, it's about what you're trying to get out of the group, and I suggest to everyone to do a weekly group, because if you want relationships to be formed, you can't do that in a monthly capacity. It needs to be weekly. The reason I say consistency is the most important thing is because there are very few things in life that are dependable. And once you have yourself implanted in someone's mind as something that they can depend on, they start to plan around you. So now that the group for 3 months has met every single Thursday, we have people who plan months in advance around the fact that at Thursday night we will have a meeting. And you just can't get that if you don't have consistency.
You've been getting a lot of attention recently. There's a piece running in the Financial Times that actually has very, very nice things to say about the group and you and a few of the other members of it. Again, why do you think that you've been able to get such traction with this idea if you weren't one of the first groups and you are still relatively new? Because you said that you started the Facebook group 3 months ago?
Correct.
So what types of things happen at these meetups? I mean, if they're that frequent, in the pre-interview, we were talking about how each of the meetings is like 4 hours long. So what is it that you're doing there?
When I think about what I enjoy, it's things that give me value. So I quite explicitly say to every single member, there are going to be no presentations. Everyone at any time has the capacity to speak, and everything is done in a roundtable sort of setting. So if I were to talk to any meetup groups, I would suggest I'll open source my format, I guess. Every single meeting, we ask the same 3 questions in a row. And if you think about it, even if you have 50 people, this only takes 15 minutes, so it's always worth doing. Everyone goes and they say, 1, who am I? 2, what brought me here today? And 3, what specifically do I want to get out of today's meeting? And once every single person has voiced that, myself as the facilitator, it's my goal to make sure that third one is accomplished for every single person by the end of the meeting. And I think that's why we have such an engaged audience, is that we explicitly ask them the type of value that they want to get, and then I personally make sure that they get that resolved by the end of the day.
That's actually a really, frankly, smart approach to it. I think that there's not really a guidebook to creating meetups and to creating these sort of situations where you can have collaboration and, and community. But right. that sounds really interesting. Jonathan, you're younger than a lot of the people who we talk to in the Bitcoin space. How did you find yourself in this position where you're able to facilitate and organize these things?
So I'm 23. As it relates to Bitcoin, I've been aware of it since 2010. And from the voluntarian perspective, I just found it fascinating. So I've kind of been throwing myself into it from that perspective. As it relates to professional groups, I helped charter a professional fraternity at my college, a chapter of a fraternity. So I kind of have a fairly decent understanding of how to form something with 40 people from nothing when no one's getting paid to do it. And I've also been a part of several networking organizations. I kind of have a feel for it, but I just think that the number one thing to do is just understand, how do you wish to have value provided to you, and then how can I do that? Because if you can figure out those two questions, then it doesn't really matter what you do or how you do it, because you'll do it right.
So in addition to the professional group, there's also this concept of Satoshi Square and open outcry markets. Can you tell me a little bit how that emerged?
Josh Rossi, who's also in the Financial Times piece, actually came up with this idea. And he came by one of our meetings, and he said, hey guys, what if every Monday I were to just chill in Union Square from 5 p.m. to 7 p.m., and I were just to buy and sell Bitcoin? What would you guys think about that? And because we have an open format, we ended up talking about it for the next hour. We didn't leave the table until we had action steps. I think that if you're trying to do anything, never end a discussion without follow-up actions for everyone to do. And the result was, the following Monday, we all met up and we bought and sold. Actually, the name Satoshi Square came from the idea that, just as with Wall Street and the New York Stock Exchange, we were going to make Bitcoin such a huge thing in the next 5 years that they'd rename Union Square Satoshi Square. And if you have any eagle-eared listeners, Kirill Gurov, who was the transcontinental Bitcoin New York transferee from the LA meeting podcast last night, he was the one who named it Satoshi Square. So a shout out goes to Kirill Gurov for that.
With the Satoshi Square thing, that's a model that was most recently replicated in Los Angeles. And I think that, to my knowledge, that's the second iteration that's happened, not in New York.
Right, that is.
Do you think that this is a model that's going to take off? And do you have any sort of guidance for how to take steps to make it easier for that to happen? I mean, do you think it's just about a critical mass of people? Because, your group operates out of New York City, and that's a very population dense, very financially savvy, very technologically savvy area. And yet, you're still only talking about numbers that are under 100 people.
Right.
What do you think the path forward is? Just keep doing it and it'll grow over time? Or are you, actively advertising? What's the strategy?
First and foremost, you have to love doing it, because you're not going to be making money at it for a fairly long time. So if you just can get a group together, 5 or 6 people, and you just enjoy their company, and you say, hey guys, you just want to chill in the park for 2 hours once a week, then all the other things will just grow from that. So that's kind of what we do at Satoshi Square, where we're like, you know what? Even if 3 Bitcoins get exchanged, I love you guys. Let's freaking chill for 2 hours, because this is awesome. If you build it, eventually people will get there. If anyone, has something, I'll try to help them market it or help them in any way that I can. But I really think that, it's just consistency and an understanding that you don't get to reap the benefits without sowing the seed, and it takes time. As it relates to the organization of a Satoshi Square, if you could use a group texting program like GroupMe, it's like an IM platform for smartphones, so that if you're kind of in the same area, you can all just have an instant message space. So hey, we're at this side of the park, not that side of the park, or things of that nature, or maybe even use that for now to put bid and asks and just see a stream of it. That's, I think, would be a very important thing.
So in the world of meetups, there are a lot of, I think, things that work and a lot of things that don't work. From your experience, beyond what we've talked about already, what are things that you think that people should absolutely do if they want to be successful in engaging the community in the type of way that you have in New York?
So I know I've harped on it again, weekly consistency. If you just ask people, how can I bring value to you and make sure that you do that for them at the end of the day. They'll keep coming back. And other than that, just be yourself and don't lie, I guess.
The initial members that you had came from a Facebook group? Was that the only advertising that you did initially to get those 30 people?
So initially, I posted it on Reddit. I posted it on Bitcoin Talk. And then I made the Facebook group. And that was it. And in about one day, I had 30 people.
So it sounds like you've had a lot of successes. Is there anything you've tried that, just has been an out-and-out failure that people should avoid like the plague?
The number one thing that people do wrong is they do presentations. My opinion on the matter is that everyone is always an equal. And if you have something interesting enough that people want to listen, they'll ask you about it. If you ever come out to one of our meetings, what you'll see is people who panel discussions or who do presentations at other meetings who are just participants in the discussion. We're all equals. And if anyone is interested in what they have to say, or if they have a pressing need to say what it is that they wish to say, they'll just say it. There's no need to confine the discussion to some strict format. Our job as meetup group facilitators is to facilitate, not to dictate. Try to provide a platform and just see how the community itself decides how it wants to derive value out of your meetings.
Are there different types of meetings? It sounds like they're more collaboration groups, and community events that you're putting on with this particular one. Do you have anything in mind where you would have presentations where that would fit into the format more so than it does currently?
As it relates to teaching, presentations is something that's just unavoidable. When we have our Bitcoin beginners meetings, those generally have about a 45-minute, an hour-long presentation. And that's just because that serves as a data dump, not a communal participation thing. But as it relates to our format, we spend the first 15 minutes asking everyone those 3 questions. Who are you? What brought you here today? And what value specifically would you like to get out of today? And then we have a communal discussion for about an hour and a half. The most important part is that once everyone has a context of who everyone else is and what their background is, they themselves break out into small groups. You'll have 6 or 7 different highly specific topics that I myself, as a 23-year-old college student, could never have the capacity to be a master in all those fields. The important thing about a successful group is just to build the road and let the group itself come together, I guess.
Yeah, I think that's a really good perspective to have. You're viewing your group and your meetings as like a platform for communication and for collaboration rather than an end unto themselves. Come to our meetup group because you'll learn everything about Bitcoin. It's not really like that. It's a discussion. I really think that's an interesting way to approach it. So listening to some of the audio from the Los Angeles meetup, it seemed pretty clear that there is still some technology that is lacking, which is kind of funny because this is such a technological thing, but it's still so early in the life cycle that a lot of the core tools that we'll eventually come to know and understand and appreciate don't really exist yet. From your experience with these various organizations, what do you think the tools that are really lacking and would be beneficial to have developed?
Josh Rossi, the person who kind of came up with this idea of Bitcoin Buttonwoods, actually has a project in the works. He hasn't hit version 1 yet, but it's called Project Buttonwood, and it's going to be an Android and an iPhone app that helps you have a reputation score as well as a place to put bids and asks. And I would highly suggest people check that out. If they'd like to help him with that, please do so. I think that right now, one of the things that you could do is use GroupMe. For those who are unfamiliar with that, it lets you kind of have like a group instant messaging platform that anyone can kind of sign on to. Have Satoshi Square in New York, have Project Buttonwood LA or Satoshi Square LA have a group IM platform that they could just all post their bid and asks on and kind of self-gather, so if they change locations, they know where everyone's at.
To that end, I was talking with John Light. He's trying to put together a Satoshi Square in San Francisco right now. One of the things that he was really, really interested in was this idea of having all of these Satoshi Square events be essentially synchronized and networked to each other so that you can have like a global or at least to start it would just be the US liquidity pool where everybody is basically standing out in the open, trading at the same time, working on the same platform. Do you think that that's the end game here, or do you think that this is more of a local thing? We saw this first cross the country transaction. Is that the future of where we're going?
I personally think that Satoshi Square, the idea behind it is about pretty much 3 things. One is this idea that we just have to be out in public so that people can understand that we're not these, basement dwelling anarchists. We really want to help the ecosystem, and we're just regular people. Not that there's anything wrong with that. About knowing that we're here and we're just normal human beings. I would also say that it's important just from a liquidity standpoint. If you want money in 5 minutes, it's pretty much the only way to get it. And the last piece is that based on whatever regulation may arise, person-to-person transactions will always be there. I was listening to your podcast and they're talking that, like, pretty much no matter where this regulation pendulum swings, if you're trying to buy and sell something, the government's never been able to stop one human meeting with another human. And I really think that before that decision can be made one way or the other, it's really important for us to build those human relationships so that should Bitcoin be not as legal as it is right now, we have a countrywide network of people who can still meet in person and buy and sell in Bitcoin.
What do you think of the exchanges? I mean, like, that's kind of the obvious, if you wanted to call it competition. I mean, it's not really competition because, like you said, what you're doing is more about almost like public relations than it is about actually trying to have an efficient market mechanism. So do you have an opinion? When you get Bitcoins, when you initially got Bitcoins, have you gone through an exchange?
All of my purchases have been done person to person.
So after doing these various meetings and, these community events and the open outcry market, what have you gotten any pushback from people who didn't understand what was going on and thought you were doing something really weird? Or, I mean, what has been the response from the community that isn't already up on Bitcoin, and how has that gone?
So just to let you know where I'm coming from, I printed 5,000 business cards for Bitcoin NYC, and pretty much, love it or hate it, I will always give you a card and invite you to come out. I haven't really received any negative feedback. In fact, one of my friends works for the Federal Reserve, and she was speaking to some of her colleagues to have a Bitcoin NYC Fed Reserve kind of lunch meeting with a couple of us, just because they themselves are just completely curious about what this whole Bitcoin thing is. So I feel like a lot of the hate that goes to Bitcoin is kind of amplified by the fact that most of us are interacting with one another over the internet, and the internet kind of amplifies all trolls. But, by and large, most people are either skeptical or just plain curious.
So, Jonathan, what's next for you and for kind of the movement in NYC that you're doing your best to steward here?
We're doing a We Are the World Bitcoin edition. So we're going to be recording a song and then asking all the people in this space, like the startups and the meetup groups, to film them singing along to the song and then turn it into a music video. We were hoping to record the chorus at the conference if we can get 15 minutes of the people there to work with us. I'm trying to grow Bitcoin NYC into a community place where you can pretty much talk Bitcoin and come together any day of the week. So I'm actually looking for funding. I applied to the foundation. I'm going to be applying to BFL's fund in the near future so that I can have 16 meetings a month as it relates to Bitcoin. And rather than just have 2 meetings a week like I'm currently having, have 4. Mondays would be Bitcoin beginners. Every Tuesdays would be our Founders Forum, which is where people who are starting businesses can come together and help one another. Wednesdays would be Web Dev Wednesdays as it relates to programming for Bitcoin. Thursdays are our general meeting discussions, and every month a weekend hackathon. And that would be a full-time commitment for me. So I'm just looking for anyone in the community who's interested in supporting that or being a part of that to reach out to me. And if there's anyone anywhere who wants help just trying to understand this space or needs help building a community of their own, please email me at jonathan@bitcoinnyc.org, and I will do everything that I can for you.
Jonathan, thank you for the work that you're doing and pioneering a lot of these things. I think that the NYC group is a great example of what you can do if you devote your time and you focus on being professional. I think that you're doing great work, and it's very important work, so thank you for that.
It's a pleasure.
Thanks for tuning in to episode 17 of Let's Talk Bitcoin. Whether you liked, loved, or hated the show, we want to know what you think. Please send all listener mail to mail@letstalkbitcoin.com. Content for this episode was provided by Stephanie Murphy, Andreas M. Antonopoulos, David Pullis, Adam King, and Jonathan Mohan. Music for this episode was provided by Jared Rubens. If you like what we're doing and want to support us with Bitcoin or Litecoin donations, please visit letstalkbitcoin.com for episode-specific addresses. If you've got a question you'd like answered on air, call us at 1-855-WE-TALK-BITCOIN. If you're planning on attending the Inside Bitcoins conference on July 30th in New York City, make sure you take our brief listener survey for our exclusive 20% discount code. You can find that on the front page of Let's Talk Bitcoin. See you next time.